Oh, really? So welcome back. I hope everybody had a good weekend. And it is Monday, a little chilly Monday. Now it feels like October. Last week, it still felt like July. This week we're in October, definitely. So I did change a couple things on the invitations that go out each day for the class. Since the Modesto Bee isn't doing the free newspaper anymore, I just put a couple of little news items in there, and you'll see that every day. So we'll just replace news with news. So one thing I know people have asked questions about is the difference between bookkeepers and accountants. So here's an article. It's from Forbes magazine, which is a money magazine, and they kind of broke down the difference in the duties. So there's an article if you'd like to browse that. And then due to our inflation, the IRS has made some modifications, and one notice went out last week about how the tax tables and tax brackets have changed because of inflation. So it's gone up so much that if you were earning a certain amount, you were paying a certain amount in taxes. Well, now that amount doesn't buy as much as it used to. So they've adjusted the rates to be more closely aligned to the purchasing power of the last few years. So they adjusted that, and you'll see they did another one. They also changed the individual retirement account contributions. And those are for if you do have an IRA, and a lot of times this is what your employer can set up for you, like when we're doing the employees. They essentially set up an individual retirement account. It's in addition to Social Security. So when you retire, you get the money from Social Security plus any money that's in your 401k plan. Well, it used to be that until they did this notice, you can only contribute up to $20,000 a year. Now, for most of us, we're not even close to that. But if you're getting close, if you try to contribute more than that, you can still do it. It's just not going to be before taxes. In other words, you got to pay tax on it now when you contribute it. So they changed it. They went up $2,000. And so you'll see for this coming year, you can do $2,000 more before you run into that thing about having to pay taxes on it first. So there's some changes going on. So we'll just kind of update you on a few changes that are happening that would affect anybody using QuickBooks. And even if we personally don't have 401ks and contributions with that much, if you're using QuickBooks or another program to do human resources and keep track of payroll, those kinds of things are important because your employees will ask you that question. Well, how much can I contribute? You say, oh, you're good now to $22,500. That, by the way, also includes an employer match. So if you have an employer that says for every $10, we'll contribute $10, or sometimes it's more like for every $10, we'll contribute $5. So it's a 50% match or 25% or whatever. You can do that. And that's kind of like free money. So I think I said before when we were working on payroll, it's a good thing to do. If you can get it and you can swing it, definitely do that because that's free money that'll build up for you. And then these accounts are placed in such a way that they earn money over time. They don't just sit there. So they're not eaten away by inflation. So anyway, that's the news. And there's always stuff going on. So we'll just kind of put a few things in there. So that way you can keep up to date on that. Then we're ready to switch in and log into QuickBooks. And I have done that here. So what we're going to do today is we're going to add a new employee to this company. Last Thursday, we added an employee. She was hourly. I'm a worker. And today we are going to be doing salary worker. So it's pretty much the same process, but a little different calculation. Before we do that though, I do have another announcement. The computer department fixed most of the computers. I still found one that had an issue, but now we have about 10 of them that are good and work in order, and they're perfect. So just FYI, we have classroom computers again. It's good because we only had one left that I really trusted, and I was really sweating that. I thought, man, what happens if that one goes down? All right, so first, let's take a look at our reports. I'm going to go to Business Overview. So in my navigator, That's where I find my reports. And by the way, there are other ways of getting into these reports. So if you have a preference, you can always use those. This will give you an overview of how much money you're making and everything. But I want to bring up the little sub-menu here so I can get into reports. There it comes. So I click on reports. And one thing they didn't fix is the speed of our internet here. So it's a little slow. Hopefully yours is going faster. Okay, so now we have access to a whole new set of reports. As we scroll down, you've got employees. Now we've actually had access to it. We just didn't have any information in there. So I'm going to click on recent/edited time activities. I'm sorry, time activities by employee detail. Let's do that one. So what this will do is if your employee is set up for tracking their hours, it'll actually run it here. And you can create an hourly, it looks like a spreadsheet, but it's an hourly form where the employee fills out the form, how many hours they worked, and then you can key it in that way when you're calculating out how much they get paid. So a lot of companies like to do that, and they ask the employee to sign it. That way they have a written record of what the employee claims to have worked, just in case there's any question later on. And nothing beats documentation. I think I've mentioned that before. Document everything. So that way, if the employee says, hey, you only paid me for 4 hours on this day, say, well, look at your timesheet. You signed it off and it says here 4 hours. So don't blame us, kind of thing. On the other hand, if there is a mistake, it's an easy way to find it because you have that backup documentation. Okay, I'm gonna go back to my report list. So we haven't used that yet, so that's still empty. But as we go down, under our expenses, you'll see there's payroll. And there are a lot of payroll reports. Why? Why so many reports? Well, I mentioned before that as a business owner, hiring an employee is the most expensive thing you will ever do. Unless you, I guess, buy a yacht. Maybe that would be more expensive. But in a regular business, hiring employees, that's expensive. It's also tends to be the most complicated. And again, why? Well, people are complicated. And as we saw, when we set up IMA, she could have certain withholdings on her. Either way, there's taxes that need to be withdrawn for her on her behalf. And then we, as a company, pay into, in addition to what she pays into. And we also have to keep track of things like, well, the 401k amount. So see, this is where that would apply. Luckily, if you subscribe to QuickBooks's payroll, those kinds of things will happen automatically. You'll actually get a notice in QuickBooks when it comes time next year that that amount has changed. And then you can do a little flyer. And a lot of people like to slip it in with employees' paychecks because they always know everybody opens a paycheck envelope. So anything you put in there will probably get some attention. Let's go down here to total payroll cost. So it's in the right-hand column here. Let's click on that. And you'll see in the upper hand side on my computer, it popped up about customizing reports. And if you remember in the beginning class, we did that. You can take any report and customize it. I'm not going to do that now, so I'm just going to close it. But here you go. Here's what we paid. Someone paid IMA. Here's your paycheck wages, all the taxes we paid, and our total cost for a week of Ima's work was $649.50. And again, that's different than what she earned, which was $600, because we had $49.50 worth of employer's taxes that are tacked onto that. And that's always the case, which explains one of the reasons employers like to classify people as 1099 contractors instead of employees. If they can do that, you don't have to pay all this stuff. You don't have to pay workers' compensation insurance for 1099 contractors. They do their own. So it's much easier and cheaper to do that. However, as the IRS likes to point out, that's not fair if they're really employees. You're basically, there's like now a 5-step or 5-question list that if you answer any of these questions, yes, they're basically an employee. And that's came from California with their big fight with Uber and Lyft, because Uber drivers and Lyft drivers are not considered employees or have not been. So Uber and Lyft tried to say our employees are the people who make our software and they make the app. That's our employees. The people we work with who actually go and drive someone from place to place, those are contractors, and they're independent contractors. We just happen to hire them and they use our app. So actually, technically, they're our customers, not our employees. And the state of California said, you're telling them how much they can charge, where they can pick somebody up, how, the route they're supposed to drive to drop them off. And then if they don't do a good job and we get a lot of complaints, you can fire them. So it sounds like they're employees to us. So they went back and forth. And I don't know if you recall, actually Uber and Lyft lost. They passed a law, and like with so many laws, it really got messy, because they basically said anybody who gets paid by anybody is an employee. And then they had people like newspaper delivery drivers, people who drive the newspapers in the morning and drop them off or throw them out their window. Used to be kids on bicycles, complained and said, wait a minute, that would include us. And then a lot of truck drivers said, well, wait a minute, that includes us. And then doctors who did house calls said, wait a minute, that includes us. So if you read the law, they did an amendment to it. There's like 20 exemptions, because you can't just pass a law picking on one company or two companies. You can't say Uber and Lyft are now hiring employees. You have to make certain conditions that just happen to fit Uber and Lyft. Well, it fits so many people, I had to revise it. So that went through. Then we had a ballot measure where Uber and Lyft sponsored it and said, let's reverse that. So it won. So finally, California did come up with some kind of compromise with them. So now Uber and Lyft drivers do get things like they can earn vacation time, they can have health insurance and other things. So that's where it's settled down. And then I should have put that in our little news thing. Maybe I'll do it tomorrow. But the federal government just came out and said, us too, hey, we're going to take those 5 questions and we'll put them to the test, and that'll be a national thing. So from now on, everybody, you better consider yourself an employee if you pass this set of questions. So anyway, IMA is definitely employee. We're going to add one more today. Let's go back to our reports here. I'm going to click on back. And then you'll notice to get to my payroll, I have to scroll almost all the way down. If you want to use a payroll employee or a payroll report a lot and check on things, you can make it a favorite. And I'm going to click on payroll details and little green star. So that makes it a favorite. I'll go ahead and run that one. Here's a breakdown of what we just saw. But as we start adding paychecks, you're going to see things. And the last time we didn't see Ima's name, but here we do. And again, it breaks down all the payments that we paid on her behalf, and then those payments we held out of her check that we will soon have to pay to the governments. I'm gonna click back again. Now watch when I go back. Ta-da! Here now under favorites, I've got my payroll details. So anything with a green star automatically goes up here, saves you from having to scroll down all the time. I can run it again, exact same report. It just launched at a different location. Click back. All right, let's run another report. It is a favorite. It's an automatic favorite, the balance sheet. So our balance sheet, remember, is one of those standard financial reports that now is going to include the liabilities we picked up for having an employee. And there they are. So you'll see these with a total down here. So this is how much we have to send a check off to the government agencies. You'll notice that 151, that's bigger than what we had before. We were like 50 something. Well, this includes IMAs. We're holding that money. We don't get to keep it. We have to turn it over on her behalf. Let's go back to reports and let's look at one more before we add one more employee. This will be the profit and loss. So it's on the right-hand side here. And now we see under our expenses, there's payroll. So that significantly changes how much money we make as a profit because we have to take out the money we paid IMA. So, like I said, this payroll expenses is very commonly one of the highest dollar amounts, because certainly more than rent. If you have like 5 employees, that's going to exceed your rent, utilities, and everything. Any questions on these reports? So you can see that now that we've added that category of expense, that will continue on all of our reports from now on. If you're a company, so you're just doing this on your own, you have your own little business, and you don't pay yourself as an employee, you can have 0 employees. It'll just be you as the owner, and then you do something different. It's called an owner's draw, where you're drawing funds out and paying yourself. Or if you so desire, you can set up the company and then pay yourself as an employee. So there's pluses and minuses to both those things. Usually it's cheaper and easier just to do an owner draw. But depending on circumstances, you can be an employee of the corporation, because remember, the corporation is an individual. All right, so with all that, let's go back into our main menu and click on payroll. So you'll notice it says 4 days until payday. That's because we told the computer we're paying IMA every week. So after today, we got 4 days left, and then we have to pay her again. You'll notice we now have a little button down here. It says View Paycheck List. I'll click on that. And this shows us the payroll we did last week. So this is a way to see all the checks you've written so far for employees. Click back. You'll see on the setup tasks, we're not going to get into all this, but here is that 401k situation. If your company doesn't have another company to do their 401k, you can actually have QuickBooks set one up for you. So that's one of those other little advertisements you'll see. And then once you have employees, the company should also have workers' compensation insurance. So that'll be another expense, and you'll have to get that. In California, you can shop around. It's not like car insurance where you see all these commercials where they say they'll customize it to just what you need. Well, workers' comp policy is basically going to classify your employees in how dangerous their work is. And no matter what the special circumstances are, once they're classified as a certain type, almost every company has to charge the same. One of those things in California, it's state rule, and that's actually pretty common throughout the places. I'm going to go to the left side and look at the employees list here. So what did I just say? Well, QuickBooks, sure enough, gave us a notice. Workers' comp insurance is required in California. And here's where they will offer you payroll. So we're not going to use that. And then the other thing I have is a little first-time message about saving time and paper. This is something that's relatively new. And what it does is gives your employees all their tax documents online. They'll have to have a password and everything, but you can set it up with QuickBooks. And again, there's a fee. But as a business owner, instead of always having to go back to QuickBooks, and like even when they get their W-4s in January, that can also be done online. And because it's online, it's a little faster than the US mail. Plus, what'll happen is, the way taxes work is everybody is supposed to file on April 15th, on or before. So the tax note forms go out the end of January, and that gives you February, March, and April. Well, what invariably happens is somebody, or an employee, will lose their tax documents, or they spill coffee on them and can't use them, so they need a copy. If you signed up for this, rather than them having the employee come to the HR department, Human Resources, and the Human Resources Department calling this up and finding the report and running it again, they could actually do it themselves. It's kind of like a self-service thing. So they can do that anytime they want. And you just tell them, hey, just go online and get whatever you need. So that's an option. And what a marvelous technological world we're in. I'm just going to close that. There's IMA. So today we're going to add an employee. And you'll notice this layout of this employees window is a little different than our customers and our vendors. Usually at the top up here, there's a green button that says new. It doesn't. Now it says run payroll. To do a new employee, you're going to click on add an employee. So if you like, you can put in your name. If you don't feel comfortable putting in your name, and nobody's going to see it, but just in case, you can make up one, but I'll put me. And again, if I want to have the employee do this work for me, I can use this employee self-setup, but I'm going to turn that off. We did the same thing with IMA. Because I turned this off, I don't have to have an email. If it's turned on, you have to have an email where you can send them a notice about the self-setup. But, so we can learn how to do it, I'm going to do it ourselves. I'm just going to click on add employee. And then QuickBooks puts a little note here on mine. Hey, did you notice we revamped the employee profile page? Tell us what you think. So it's a survey. I don't really like it when they put in software. They say, hey, seems just too informal to me, but I know they're trying to be hip. So I'm going to close that. You can leave it up, but again, it takes up space on my screen, and I'd rather have my screen dedicated to all the stuff I really have to worry about rather than their stuff. Okay, so there's personal info. I am going to click on edit, and let's put in some information. So this person is going to be a salaried person. right? So Ima's hourly, this person's salary. If you want to put in a birth date, it's for personnel purposes, you usually have a birth date because it's also an identifier. Remember I mentioned before, you can have lots of John Smiths. John Smith is a pretty common name, but very rarely would they have the exact same birthday, or at least the same birthday in the same year. So this I will make up because that is kind of personal. There we go. So the problem is when you start putting in this kind of information, you think, oh, what, just a name and birth date, that's nothing. Well, what hackers can do is they can use those two things to get more information. And then they get enough to break in and steal this person's house. That's called home title theft, or they can steal, apply for credit cards, because the birth date has become almost as important as a social security number, just in confirming birth dates. So you do want to be careful about this kind of information getting out. One of the things we'll be doing later is setting up passwords so only certain people can get into the payroll information. And that's a good thing, because like I said, if somebody wanted to, they could break in and get my information and then try for a credit card on my name. So I'll put an address. Again, I'm going to use the high school here. 640 M Street, Patterson, California, 95363. As I'm typing it, you'll see I get a list that pops up, and it starts closest to my area by zip code and then works its way out. So you see there's Patterson, there's an M Street in Livermore, an M Street in National City. There's also one in Colorado, in Penrose, Colorado. Tawas City, Michigan, never heard of it, but lots of M Streets. So I'll just select it, and that verifies it's a correct address. Again, a social security number. This one definitely I'm going to make up. So it's a 9-digit number. I'll just make up. QuickBooks does not verify it is a correct social security number. All it does, though, is when it runs reports and prints documents, it will use this number as an identifier, because that's how the federal government and the state government identify it. So the other items we don't have to have, I'll just put in the phone number just to have something here. And I'll click save. So you do have to have a social security number, you do have to have an address. I don't believe you have to have a birthday, but usually you have the employee's birthday. All right. I'm going to go into the tax withholding. So it's the second box, and click on edit. Now, we did this with IMA. It doesn't matter whether you're hourly or salary. You're going to do this the same way. So it's asking, when did we hire? We're going to say 2020 or later, so we can use this form. So it works exactly the same whether an employee is hourly or salary. So I'll say married, filing jointly. You'll notice on my list here, I have a choice for or qualifying widower. What that does, it's a category that if you it's like military. If a spouse has died in the service of the military, you can still file jointly. In that way, you get a little better tax breakdown on certain things. Otherwise, widows and widowers can file single or married filing jointly or separately. One thing you're able to do as an individual, if you get the TurboTax on April 15th or before April 15th, you can run your taxes if you're married and say, all right, I want to see what it looked like if we both filed separately. So you run that. Ooh, okay. And then you run it married. So they can do that and see what's a better deal. So it's perfectly acceptable to do that. 9 times, well, it's 8 times out of 10. Married filing jointly usually works because there's more benefits to that. But one of the things Congress loves to do is change tax laws because it makes it feel like they're doing something. So you'll hear about tax breaks for so-and-so, tax credits for so-and-so, tax rebates. So a lot of that will make the circumstances change for individuals and for married couples. So a few years ago, they nicknamed it the death tax. And it wasn't a tax on somebody dying. They didn't send you a bill for dying. What it was, though, is when a spouse passed away or an individual passed away, then the money that they owned and the value they owned was taxed at a higher rate when it was transferred to their heirs. So that's why they nicknamed it the death tax, because when you die, they're going to get your money. So that was eliminated. So that's just another example where these things do change a lot. And I mentioned that employees are complicated. The tax laws make it even more complicated because they're constantly in flux. They're constantly changing. And then you have to deal with both the federal and state laws. Luckily, you're paying QuickBooks to handle all that for you. Okay, you can also set up dependent deductions. If there's a person who the majority of their income is reliant on the employee, usually kids, then they can use a deduction and get a deduction for that. And my son joked because my granddaughter was born in the late December that she counted for that tax year. She's his little tax deduction. So if it happens any time in the year, even the last week, it counts. Again, with the state, it's almost exactly the same. Oops. There we go. Same status as above. Very rarely would they be different, but it's possible. And again, it's up to the employee to tell you this. It is technically not the employer's job to know all these definitions, but I'll tell you from experience, it really helps because employees, if I didn't know better, I didn't know who would you turn to. If you call an accountant, they might want to charge you just for an answer. And if you check on the internet, you never know if you can trust the internet. So it's good to be able to turn to my human resources department and say, look, here's my question. My son lives with us part-time, but most of his income comes from me. Can I still count? Questions like that. So that's why employers will send all the people who work on personnel to lots of training. All right, I'm going to click save. Great. All right, so we've got employment tax withholding done. Let's go to the payment method. And once again, this one's a fast one. I'm going to click on start because you're not editing it. But we're going to start with paper checks. The other option is direct deposit. Even if you're the owner, you can have a direct deposit. But we'll just do paper checks because they're free. I was going to say they're completely free. They're not completely free because you still have to buy the checks and print them. So I'll save that. One question comes up, can you just print your own checks off your printers these days? Because printers are pretty good, especially the color printers. And the answer is you can. I have been told, although I've never tested it, that as long as you have the bank account number, the routing number, and of course the dollar amount and who it's to written out, that if you wrote it on a paper towel, the bank's supposed to take it. You could put it on a brick, take it in, say, here's my check, and the bank is supposed to take it. Like I said, I've never tested it. So you could do that. The problem, of course, is security. If the bank sees that your check's going to look very simple, basically run off your own home computer, then they will get used to that, and it becomes very easy for somebody to forge a fake check. When our school got broken into quite a few years ago, we had an old box of an old checking account. But the checks, we changed checking accounts years ago. Just nobody had the heart, I guess, to throw up the checks. Didn't know what to do with them. We should have just shredded them. But we did find whoever broke in had written themselves a couple of checks and signed their a scribbled signature, not their name, but to make it look like a signature. But didn't cash it. I guess they figured, hey, if I do this, I'll get in trouble. I mean, you're already in trouble, but I'll really get caught because they'd have to put a name in. But I think it was like $20,000 they're writing themselves a check to. All right. Let's go to employment details. So this gets a little more into the nitty-gritty. So this is going to be the status. Are they currently active? Are they terminated? Are they deceased? Or are they just no longer on the payroll? You can also set them up for a leave of absence. And what that basically is a timeout. So if you have a qualifying life event as an employee, you can ask for a leave of absence. So for example, if a baby's born, there's parental leave. And depending on the company, there are laws that say companies over a certain size have to offer so much in parental leave. However, it doesn't say they have to be paid, meaning the time you take off, you don't get paid for. But they don't fire you. So they hold your spot. So when you're done, I think it's like 30 days or so, when you come back, there's still a spot for you. There's also leave if somebody's in the National Guard. And a few years ago when we had the war starting in Iraq and Afghanistan, a lot of National Guard people got called up and had to take leave from their regular jobs to go serve over there. That was usually granted, and they got to come back to a job when they were done. You'll see there is paid and unpaid. Of course, paid is they're going to get some money for while they're gone. Unpaid means they're gone. They'll get no money, but they're not fired. Their spot will be there when they come back. So we'll just make us active. So I'm going to make me active. I'm going to put the hire date as October 2nd, or pardon me, October 3rd. So it was the first Monday. You'll notice though, the hire date doesn't have to be the start of the payroll cycle, meaning I'm just going to pay myself for last week, but I can say I was hired or I started this process on the 3rd. Same with IMA. So you don't have to do it on the same day. The reason you might not do that is your company may sign all the documents and make it official on 3rd, but there's no active schedule set up until, in this case, last week. So that can happen too. So they're hired, they're officially starting, and then the process goes through for them to be put on the schedule. And there's a lag time. So it's not always the hire date is their first active day working in the job. On the other hand, a lot of times it is. Okay, so job title, say manager. Now, I don't really want to say owner because owner can, if somebody else is looking at it, it can have different connotations. And basically, if you're an owner, why aren't you doing an owner's draw? So you're acknowledging that in this capacity, you're the manager. And once again, if your company is using ID numbers, you could put one in here, but we're not going to do that. I did work at one place where you had to have a name badge, and they did have an ID, and you had to wear it all the time when you're at work. And you had an ID number, and they knew you by that number. Okay, I'm going to click save. All right, let's go to pay types. And I've got another little start button. All right. Here is where we're going to have to determine my, as a manager, pay type and how much. So first of all, you'll see under pay type here on the left-hand side, there's 3 kinds QuickBooks can categorize, and that's hourly, which is IMA. You'll notice it defaults to hourly now. Salary, which is what I'm going to be, and then commission only. All right, so there's salary. So now we have to determine how much are we paying ourselves. So this is me. How much do I want to pay? And I think I mentioned this Thursday. It's funny, usually in the class when we do this, people will say, when we're going to pay IMA, what's the minimum wage? What's the least I can pay her, right? But now that it's me, what's the maximum? How much can I pay myself? I think you can pay yourself as much as you want. The only thing is you have to have enough money in the checking account to cover it. Now we don't here, but let's come up with a number that is reasonable and try not to go too far out. So I do notice it's 6:53. It's break time. So you got 10 minutes to figure out how much you want to pay yourself. So we'll be back at 7:03. And then we'll put in how much we're paying ourselves. Okay, we're back. All right, everybody come up with an amount that you want to pay yourselves. So here's a way you can figure it out. You notice the pay frequency is per month, per year, per week. So let's say you want $4,000 a month. It's humble, good salary. You can do that. So it's set to $4,000 per month. Or the other way to express that is do it per year. Instead of 4,000, it'd be 48,000. All right. So you can do it either way. Just make sure this is accurate. In our job placement office, we got the new ads each day for the new jobs. And one of the sources found it was a counselor for this amount. See what that is? This says it's hourly at $48,000 an hour. And I said, I'm applying for that job. That's a good job, $48,000 an hour. But what they did is they messed up. When they use their computer system to do the job listing, instead of hourly, they meant like salary. Okay, 48,000 a year is a lot different than 48,000 an hour. But I wanted to call them up and tell them, hey, truth in advertising, you got to pay it. But of course, not quite. So you want to make sure that you're doing that. Same would, you'd have a similar problem if I said 48,000 per month. That's 12 times 48,000. You're talking over $100,000 easily, 6 times over. So same with per week. So you want to make sure that the number matches the type. So I'll do it by annual. By doing it this way, QuickBooks will break down how much you're paid in increments, meaning if I pay myself for a month, it'll pay me 1/12 of $48,000, so $4,000. If I did it by week, there's 4 weeks in a month, it would be $1,000. So it'll divvy it up based on this number right here, this 48,000 or whatever number you decide to put in there. If you want to go higher, you can. Like I told you before, our checkbook here is all fake, so you can actually go into the red and bounce. It actually won't bounce any checks, but you'll have a negative balance. And then you'll see this category over here. Now this made sense when we had Ima, because she's hourly, right? But if even if you're salary, you can still put in here default. You can still track hours. And people will do that just to see how many hours a week am I really working. So right now it's set to 8 hours per day, 5 days a week. As I said Thursday, usually if you're salaried, you end up working more rather than less per day. You just don't get paid for it. No overtime. However, you will notice there actually can be overtime even for salary, but generally you don't. Generally, that's the idea of salary. What's happened though is a lot of companies thinking, oh, they're great. We'll just make everybody salary and never have to pay overtime again. And some of the agencies are on to that. So they said, no, you can't do that. So again, it has to meet certain requirements to be counted as a salary employee rather than hourly. It's also called exempt, meaning they're exempt from all these rules about overtime pay, holiday pay, and everything. So the employers have to be a little cautious about just saying, okay, everybody's salary. That makes it easier. My life's so much easier now. So but we will go ahead and just leave these open here, because generally with salary, you don't have those. However, QuickBooks does allow them, and it is possible, but generally that's the difference. That's the biggest difference between salary and hourly. Ideally, the amount you're paid as a salary is higher than if you were paid hourly. So this is usually managers or supervisors or even, vice presidents. They're paid salary. But not always. Okay, let's go down the bottom. You see, we have the time off policies. So they're all set to none. So what's it do and add a new paid time off policy? When I do that, again, this came up with IMA, but it works the same way for salary. How are the hours accrued? And again, if it's each pay period, essentially the employee earns the paid time off time by working. So you can set that up, or you can just set up on anniversary date, meaning because I said my anniversary is October 3rd with the company. Next October 3rd is when I'll get however many hours I'm going to earn. Or you can just start at the beginning of each year so everybody gets the same at the beginning. So it's again up to your company. So we'll do 24 hours per year. And then once again, maximum allowed is 24. Now you'd say, well, why are we doing hours if this is salaried? Because sometimes, depending on union rules or even certain laws, there are certain employees who still have to accrue time off. So it's essentially, even though they would get salaried, if they were gone for 24 hours, so that's 3 days, they could still get paid. Whereas if you're salaried, that could become an issue. 3 days is kind of a lot in a string. But if you're trying to comply with certain laws, like parental leave laws, you can do this for salary as well. So we'll click save. And then if I wanted to start off, we can start off with a current balance. Now it's going to start off 0 because we haven't put any hours in yet or any weeks and pay periods. However, one of the things you can do is when I talked about last week about negotiating a salary, if they can't come up in dollar amount and how much you're paid, one of the things they can do is give you in advance some paid time off or paid sick pay or vacation pay. And that's something else that's negotiable. And that technically doesn't cost them anything up front. It's something they'll pay later on. So one thing you can do is say, all right, I'll take your $28 an hour instead of 30, but can I get some 10 hours of vacation pay to start? And they might say, well, yeah, because they don't have to deal with it right now. It's whenever you want to take a vacation. And then, of course, the first day you go to work, you say, hey, I want to take my vacation pay tomorrow. I'm kidding. You wouldn't do that. So anyway, we'll leave the balance at 0, but you could put a balance in there. And you notice there's decimals. So depending on how your pay time off is accrued, you actually can have like half an hour or even 5 minutes. If you said they're paid or they earn this by the hours they work, and then for let's say it's 1 hour every day, or let's make it 1 hour every week, so 1 every 40. But on one day they missed half a day and it's unpaid, well, they don't earn anything for that half a day. So this would actually show something like 1 or 2.05 or something. Let's scroll down. We won't do any sick pay for me. There is this category of additional pay types. And once again, if you have special circumstances, you can include them here. It's not required. All these are optional. The one that comes up a lot, especially in restaurants, are like tips. But there are other things like bereavement pay. If you have your company policy allows people to take time off when a family member has passed away for their funeral or just to make arrangements or things like that. You can set that up too. And again, let's turn it on for a second. Once you turn it on, you can set up how many hours they get, whether it's a set number of hours or if it could be earned or whatever. We'll leave that turned off for now. It's rare for salary people to accept or get tips, but it's possible. And usually if that's the case, it's when they pool tips amongst all workers. And sometimes they'll use salary workers if they're like the restaurant manager. So they'll get a portion of the tips too, because they provided part of the experience that the customer's tipping on. They do that though, they're supposed to let everybody know, like on the menu somewhere, we pool our tips. And then you run in, those restaurant owners run into the problem where a customer doesn't want to pool the tips. They want to give it to a specific person that they had an encounter with. And it could be the waiter or the waitress. And so they try to say, here, I want to give this to you directly, don't. So you don't split with anybody else. And then that puts the employee in the policy or in the position of breaking that policy. So that's the kind of the problem with tips. One of the problems with tips. A real quick side note on that is on tips. For a long time, certain fields and categories were expected to get tips. So like waiters and waitresses, cabbies, people who drove cabs were expected to get tips. So what happened is the IRS said, we know there's a lot of cash changing hands, and we know people are going to be very tempted to just slip in their pocket and not pay on the tips. So they had a policy that for whatever your salary was and the category, you would actually be taxed, assuming you got a certain amount of tips. And it was a lower end, so that was good. But what if you didn't? Well, then you're paid taxes on something you didn't actually get money on. So that was a mess. So they keep trying to fix that kind of thing. We're going to click on save. And here we go. And then we'll check in here on deductions and contributions. So this one here. And this again is where it can get very tricky. But luckily you have QuickBooks as your ally, and QuickBooks will guide you through it. So I'm going to click on add deductions contributions, and you'll see the different categories here. So if you offer health insurance, the company can decide whether or not your salary employees are going to pay for their own. For Ima, she's an hourly worker, she might have to chip in. Whereas one of the perks of being salaried could be, no, salary workers don't chip in. The company will pay their entire premium and things like that. So you'll see they have these different categories. For our first go around, we'll just keep it simple. And then there's garnishments. And you can see these again, tax levies, child support, those are the most common. And there can be other garnishments. Usually it has to be done by some kind of court documentation. And it's basically the court telling the employer, you have to do this. Even if it's child support, the court still has to have, there still has to be a document. So if an employer gets a document that says you shall withhold a certain amount for child support, and you have to turn it into us, and it'll give you the agency that it's supposed to go to, and the employer does not, the employer is now breaking the law. And employers will say, well, wait a minute, I didn't do anything. It's not my child support. No, but when you're an employer, you take on certain responsibilities, and that's one, and it's a legal responsibility. So if you just said, oh, I'm not going to do that, you as an employer can get in trouble legally for not doing those withholdings. So I'm going to cancel it. So for now, we'll just leave these blank. But as I mentioned before, this is where things can get really tricky, because depending on the type of garnishments, they can have more than one. And some employers do end up with that. And some industries end up with a lot more than others, especially if it's something where like a person won't work at the company for 30 years. They'll work for maybe 6 months, a year or so, and then leave and then go somewhere else. And like construction or something like that. So that will happen. And the more people you bring in, the more likely you are going to get some of these garnishments. Okay, I'm going to click on the employee list to go back to my list, and I should see me and Ima. Let's take a look at Ima. So we set her up on Thursday. You'll notice we're looking at her profile. We also have these other categories. Paycheck list. So I'm going to click on that. This has a listing of all her paychecks. She's got one so far. If you ever needed to reprint it, or if there's ever a question on that, you can call up any payroll check this way. You can also do it from the checking account, but the checking account has all of our checks. And this way, it's just a quicker way to get to the employees. Let's click on documents. If you needed to do the W-4 form for Ima, you can do it here. And then you've got notes. Let's go and add notes. So here's what notes are used for. They're basically a way to keep track of employee activities, especially if there's certain things that are important for personnel issues. So one thing could be that if we received a wage garnishment today, it's good to note it. Just received by registered mail wage garnishment. Okay. Then that stays in our record. Okay. The other thing that can happen is just any interaction with employees. And some companies have a policy that anytime personnel talks to an employee or does something for an employee, it needs to be noted in their file. Well, that's what this is. So let's just say in this case, on today's date, Ima stopped by and asked if she can pick up her checks each week instead of being mailed. This was approved. Something like that, right? So just, she came in, she asked for that. Usually they say everybody else goes in the mail, but she'd ask for that. And he said, fine. Okay, so that's here. I'll click save. And you'll notice the note appears here. So later on, something else happens, you can put another note in down below. One thing about this, because we have the notes ability for our customers and for our vendors, but where the notes can become a real issue is here in employees. So you do want to be very careful about how the notes are entered. So you notice I say, no, I'm a stop by, right? I didn't say, I'm a stop by and was a real jerk and demanded. See, something like that. The reason you want to be careful of that is whenever there's a legal issue with an employee. So let's say Ima works for us, 6 months later, she gets fired. She goes to court and claims she was fired for hostile work environment. Well, so a lawyer picks it up, sues our company, then we have to go to court. What her lawyer will do is ask for her personnel records, and you have to hand them over to her, whatever they are. You can't change them, it's too late. They have to go as is. Well, if the employer sees lots of notes like this was, oh, it says here she was a real jerk. Well, so maybe there was a hostile work environment. Look, she can't even do a simple request in human resources without getting called a jerk or something like that. Now, of course, the lawyer wasn't there. Either was the judge or the jury, but it does look like somebody's picking on her here by the phrasing. So usually, if you're putting notes about employees, they try to have just basic facts and no extra descriptive language. So the and was a real jerk and demanded goes back to the office and asked. See, that's more neutral. Now, even if she was a jerk, you still have to be careful about putting it in here just in case it becomes an issue later on. If let's say she came in and she threatened to kill somebody if they didn't do this request for her. Okay, that one, usually it'd be a supervisor or somebody, should be documented because that's pretty serious, right? Something like that would be very serious and should be correctly documented. But again, you have to use, be as objective as possible and use neutral language, even if it's something really bad. Because later on, when this is reviewed, then it can, the person who wrote it can get called into court and have to explain, and then depending on the other side's lawyer, it can really look like a situation was different than it existed at the company. The other thing this is good for is, let's say Ima leaves us. So she's moving cross country. She goes to Florida. She says, she calls us and says, I have a great time in Florida. I'm looking for a job. Can I use you as a reference? And the employer says, yes, you worked for us. You were good. We'll definitely be a reference for you. What that means is when a new employer is interested in hiring Ima, they will ask her, can we call your last employer to see what they think of you? And she says yes, and we might get a phone call. Well, for some companies, there are so many employees and nobody can remember everybody, especially if they're gone, right? Say this happened a year ago now. So the notes can be helpful for giving a reference. So I'll click save here. So go back to my employee list. Okay, so Florida Acme Supplies calls up and says, I have an employee here. Her name's Ima Worker, and she worked for you, and we'd like to get a reference. Okay, first of all, a lot of companies will have a rule that if that's the case, there needs to be a document that's sent over, either by email or mailed, and it's essentially a release by Ima so that you can talk about her, just in case. Because again, this gets kind of sensitive sometimes. But let's say we're a little more, or a little less formal than that. So I say, all right, let me see here. Here's Ima. I call up her information. I click on the notes and I see there wasn't anything bad. And there might be some good things, by the way. If she has a performance evaluation, does a good job, I might say here, Ima completed her performance evaluation and was complimented on the neatness of her work, something like that. So that could be here. And then when I'm reading it, I could say, oh, well, I can tell you that she was complimented on being neat in her work and she had a good attendance. So that's where these notes can come in handy to basically say it. Now, what happens is usually an employee knows that if they had a difficult experience with an employer, and whether they were the cause or not, that's not one you should list as a reference because somebody might really say what they think. Some employers will refuse to do references at all. And it's because they don't get paid for it, right? So it's a courtesy to all your employees and to other businesses. But it can be a liability, meaning if somebody calls up and says, Dan's applied to this job and we'd like to know, what do you think of him? And I say, oh, Dan, you're going to hire him? Boy, you're dumb. I'd never hire him again. I hate his guts. Something like that. And then, so I don't get the job, but I find out about it. What can happen is then I might have a court case that here somebody was saying bad things about me. If we look at the documentation, there's nothing in there in the documentation for them to say that. So they really shouldn't have said that. So see how that makes an employer have to go to court when they didn't get anything out of it. All they did was just give a reference. So some places are very strict about how they allow references to be done. But anyway, that's what the notes can be used for, and keep track of an employee as long as they're with the company. I'll go back to my employee list. Now I'm going to click on me. Here's me. Click on my notes. Of course, I don't have any yet. I also don't have any paychecks. So my paycheck list is empty. But salaried and hourly are treated the same as far as the different documents and information that's stored on their behalf in QuickBooks. But now that I'm here, I'm going to go to Actions here. And under Actions, you're going to see Send Invite. So if I wanted to, I could still ask this person, me, to use the email to update your information. So remember last week, I mentioned that some employers do those W-4s the first of every year, no matter what, for everybody. Well, you can do that now. You can do it electronically. Send everybody an email to please update your W-4. Okay, let's go back to the employee list. Now on the right-hand side, we've got Run Payroll. You'll notice though, it still says, or it's changed, it says next payroll due Friday, 10/21. That's because we added ourselves, the second employee who is paid weekly, but started working before today. So we owe them a paycheck. So that's okay, we can do that easily. When I click on the drop-down list, the other option is running bonuses. And that's usually done at the end of the year. And this is especially true with salary, is sometimes salary people will earn bonuses. So if they have, this will run a check for their bonus. Well, we're just going to run regular payroll. So I don't know about you, but I got finished direct deposit set up. So I'll just tell it to, I have to tell it, remind me. I can't just close it. It's really pushing that direct deposit. And then I get a little note that by default, it went ahead and filled in some pay hours. It also automatically assumed our checking account, which is good. But it put the pay period in for this week. Now we already paid IMA for last week, but we got to pay ourselves here for last week. So I want to pay me, Dan. So I'm going to reset this to the prior week. And I missed. Should be 10/15 and 10/21. There we go. And then it assumes today's date. So that's accurate. That's what we're doing. So that's correct. However, if I wanted to, I could backdate this, because remember we did this on the 21st or the 20th, but we said that Friday was the pay date. QuickBooks will accept it if you backdate it. So we'll just go ahead and leave that for now. Down below, you'll see IMA's check mark got turned off. Because I picked a date up here as a pay period for which she's already received a paycheck, it's going to take her number off, or her check mark off. I can turn it back on, but you'll see, actually, it won't let me do it anymore. It used to let you turn it back on, but it will give you this warning, which is right here, that there already is one. So you're not accidentally double paying for IMA. Oh, here it is now. They moved it over here. So now it's created another check for IMA. But I don't want to do that. I just want to create one for the salary employee. And down on the right-hand side, we can preview the payroll. If I wanted to quit right now, I could save for later, and I'll save all my information about this payroll. But we're going to go ahead and go through and do it. You'll see here, here's the total hours. And here's the total pay. Now they are going to break out those taxes. So the employee taxes are going to be $152.60. So you earn more, you got to pay more taxes. I do want to take a look at how this is working here. You'll notice in this box, I cannot change the hours and the rate. That is set at the information level where we set up the employee. So I could put in how many hours because she's hourly. But once you switch to salary here, this doesn't show up. Now you can adjust the paid time off if you wanted to. But we're not going to do that. However, we are leaving the time off for this paycheck here. If for some reason this paycheck didn't apply, like we have policy, you only start accruing paid time off the first day of the first month you start working. So in other words, November, not today. I could turn it off here and it loses it. But I want to turn it back on, have it do it for that for me. You'll also see we have a memo field, just like we did with IMA down here. And this is for notes. However, again, this is more notes on this paycheck, not necessarily the employee. So I wouldn't want to put here, Dan wants his check handed to him instead of mailed each payroll period, because this sticks with this check. It would not show up if you looked at Dan's notes. So this is more something like printed the check on today's date. With a check date, like that. So I mentioned we didn't do this Thursday, we're doing it today. The pay period ends Friday, and then I changed the date up here, the pay date, to be the 21st. So I'm going to put a little note on here if I wanted to say why I could. I ran out of time, or Dan didn't get his paperwork to me on time and I can't cut a check till I get his W-4 or something like that. You could certainly put that here, and you can copy and put it in the personnel record too, just because it's a record of what happened. So we had the place I worked for, that they had a company, FedEx, the payroll in, but the process was such that it ended up being 5 days later. So they looked at the check, employees looked at their check dates and said, hey, wait a minute, you had this done on Friday, you printed this on Friday. I could have had this money over the weekend and I really needed it. So why didn't you just get us the checks earlier? I would have driven up and got it. It's a different city. So sometimes they'll post date the checks so that they basically, employees receive them when they arrive. And that way it avoids questions like that. But we'll just leave it like this and click OK. Okay, I'm ready. I can submit payroll. And I think it didn't like my date. Okay, it's saying because we picked Thursday, I get this notice here. You picked a date may cause a late tax penalty. So it's basically saying use today's date now. So continue. We'll make it the 24th. See how that worked? Now, everything else is the same, so I'll preview payroll and submit. Once again, it's done. If you wanted to, you could put a check number here. I think we did 1001. You could do that and click finish payroll, or leave it blank. It doesn't have to have a check number. And then I get a little ad about using direct deposit. And then these are some shortcuts. I'm going to say no thanks to all these shortcuts. We don't have that many employees, but if you had 100 employees and they were all different, these little things, you can set up employees to be paid automatically, like salaried usually are paid automatically. Hourly may not, because it depends how many hours they worked and you got to get their timesheet, things like that. We're just going to say no thanks. All right. So let's see if that check did work out. So I'm going to click on my gear up here and check my chart of accounts. And then I'll select my checking account, and there it is. So you asked, can I repeat the last step? Let me know which step you want to do. Or here's what I'll do. I'll go into my checking account and view register. There's me. I'll just click on edit it. So let me just delete this check and we'll just do it over again. So let me go back to payroll. And by the way, this is a good way to review how to delete a check. So the thing is, because it has so many deduction withholdings, if you need to change something, usually it's best just to delete the check than try to edit it. So here's me, salary. I'm going to go to paycheck list. I'm going to click on a check mark here. And then I'll click on that transaction. And on the right-hand side here, we got three options. Void is if you actually printed the check and let's say they lost it. Or it got stomped on or torn and then the bank won't take it, so they need a new one. You can void out this check number and then use a new one, or I'm just going to completely delete it. Am I sure? Yes, I am. I'm going to delete. Okay, so let's do the information for the check again. So here's my employee list. So I'm going to run payroll. At the top, I'm going to change the pay period. And by the way, as I do so, you see the computer automatically selected all my employees, both of us, to be included. But as soon as I change this, that's going to change too. So I'm going to say that was last week, the 15th to 21st. See how it did change the check marks here? Which makes sense because I'm already got one, only one per customer per day, per week. Okay, so that's when I got the check mark here, I want to proceed. I'm going to use this button to preview payroll, and that lets me enter all the extra information. If there is any. So I went through the things you can edit by clicking this little pencil here, but we didn't change anything. We just went through what you could change. So really all I have to do is click Submit Payroll. And then you should get this payroll is done. And then down below, if you want to put a check number in, like I did, I just put in 1010. The thing is with check numbers, you don't want to duplicate the check numbers. And really, you'd have the physical check in front of you and you just key in the number. You can set it up so QuickBooks, if you do a lot of payroll checks, will automatically advance each number forward one, or you can just put them in by hand. And then I've got Finish Payroll. And then it's about taxes. I know, I'll do it later. So I click, I'll do it later, so it goes away. And it's done. So there's two ways to look at it. One is I can look at my checking account. So that's the way I did it by going to this cog, chart of accounts. And look at my check register. And there's me, Dan. So my salaried employee now is on top. You'll notice the salary and the hourly are both split because it doesn't matter whether they're salary or hourly. There are all those other accounts that include the withholdings. So there they are, Medicare, Social Security, income tax, federal withholding, all that stuff. So I can close this window. So I mentioned there's another way to look at this. I went to my checking account, but I could also gone back to the employee list. And now that the salary person has a check, I can click on the name. Paycheck list. And here it is. And clicking anywhere on that line will bring up the details. So does that answer your question? And you can also see if I did it wrong again, or I made a mistake, or just wanted to do it over, I could delete one more time. You can delete as many times as you want. So I hope that cleared it up when I close that. Now, I said I'm paying all my employees weekly, and we're doing that because the class is only 3 weeks long. And so we wanted to have a chance to do a couple checks. But they're both now on the same schedule where they're going to get paid each week. And you'll see the next payroll is due this Friday. So it tells you what's coming up. So if they weren't on the same schedule, what would happen is it still would say the next payroll is still going to be the 28th. Why? Because as long as anybody is due for a check on the 28th, then it's going to be the next payroll due. If the salary person is paid monthly, they might not get a check until the 31st. Well, that's okay. I'm still going to get one on Friday, so she's going to show up here as that's the next payroll. So it only shows you the next coming payroll. If everybody's on the same schedule, they'll all have the same date. But I was just trying to say they don't necessarily have to have the same date. And usually if you are working with both salary and hourly, a lot of times the hourly ones are paid bi-weekly, like every 2 weeks, or semi-monthly, like the 1st and the 15th. I know most people I know like getting paid every 2 weeks, because when they do it, the 1st and the 15th, what happens is that 15th check can be extra big or extra small, depending on how many days there are in the month. Whereas salary might just get paid once a month. So that would be an instance where you'd have hourly getting paid more checks, salary just getting paid 1 check a month. So again, you can do it any way you like. There are rules though. You can't pay, I believe in California now, you cannot pay hourly less than twice a month. You have to do at least twice a month if they're hourly. But salary, you can. But if you're wondering about that, check with an accountant, because they could tell you for sure. But I remember that was a rule change not that long ago, just a couple years ago. Any questions on salary? So I mentioned this can be the challenging part. And not necessarily just because of the computer software, but because of the human element. There are lots of different things that occur all the time. So if there are no questions, we are done for the night. Have a great evening.